Welcome back. I'm Brandon, the HBAR Bull, once again joined by Zepsi. We both do some contract work for the HBAR Foundation, but we don't do these weekly updates in any official capacity. We're just coming to you personally to give you the latest in the Hedera ecosystem. Welcome, Zep.
How's it going, Brandon?
It's going really good. But as always, none of this is financial advice. Use it for entertainment or educational purposes only. So we'll start off with some news that turned the broader crypto market around and has caused a pretty nice rally here early on. It started with BlackRock just over a week ago announcing they applied for a spot Bitcoin ETF with Coinbase as the custodian. And as mentioned, that news lifted crypto and the HBAR market off its recent lows. Then earlier this week, we enjoyed another bump as a new entrant into the exchange landscape was announced. EDX is an exchange that has been in the works for some time, but it just went live. They are backed by the likes of Fidelity, Schwab, and Citadel and have a TradFi feel, to say the least. Unlike the norm in the centralized exchange space, at least the crypto centralized exchange space, they are non-custodial and their model looks much closer to how exchanges like the New York Stock Exchange and the NASDAQ operate. Initially, they are only trading assets that are pretty far on the non-security side of the spectrum, like Bitcoin, Bitcoin Cash, and Litecoin. I think the market assumes with such impressive support, they must have found an exchange and onboarding structure that will get less scrutiny from regulators. There also may be the possibility that EDX and its backers just believe that by the time any action is brought against them, the environment will generally be more favorable for crypto. Not to put on my tinfoil hat too tightly, but it is interesting that the crypto incumbents get hit really hard with regulatory action, and then these more traditional institutions move into the space. No matter what, I do think it's good to get more access, but I also want those that provided access early on to the masses, like Coinbase, to find a space. And hopefully that space is in a regulatory environment in the US that is more conducive to innovation in general. I do think the best thing we can do moving forward is just show the value of what can come out of DLT. And we have a heck of a lineup here today of thought leaders that are building in the space. We're going to start off with Shannon. She is the CEO of Quarter Homes, and Scott Teal. Of course, he's an OG in the Hedera space, and he is one of the founders of Toko, who is in securities tokenization. And that's what they're going to talk about today, along with some other things. Like we talked about TVR recently, and he is the one who coined that term. So let's hear what their insights are. Shannon, can you explain the milestone that was achieved in Colorado and how Toko helped you achieve it?
Yeah, so we at Quarter Homes have been working with Toko for years actually on creating a platform that can tokenize real estate, owner occupied real estate, so that we can partner potential homeowners with actual investors who want access into this new asset class that doesn't exist yet. We've been working with DLA Piper to really thread the needle on the securities laws and the consumer protection laws and the tax laws around that. And that's actually how we got connected with Toko. And through that, we did the first home in Colorado. It's actually my house. It was a $740,000 house. We tokenized about 97% of that onto the blockchain through the Hedera protocol using Toko's tokenization engine, and minted those tokens, which is it's super exciting. The first time anyone's done anything like this, and just the first of many.
It is very exciting. And one of the nice things with all the regulatory headwinds out there right now, you aren't working in a regulatory gray area. We know that these are securities and they can be treated as such. So, Scott, what are your thoughts on this quarter collaboration?
Yeah, look, it's been really exciting for our team for a couple of reasons. One is exactly as you just alluded to, the fact that this isn't a project where we're talking with a client that's trying to sneak around in the shadows of unregulated coins and making arguments to try and circumvent regulatory oversight. In fact, quite contrary, the approach here has been to presume the highest level of regulation that exists and to actually confront that head on. And our view, not surprisingly, I guess, for a tokenization platform that's come out of a global law firm, is that actually regulation is good. It provides not only certainty as to how to go about structuring deals, but it's actually fundamentally good for the underlying project. The rules, much as people may not necessarily always agree with the approach of regulators, at their core, what they're trying to really do is provide protection for investors to ensure that there is no asymmetry of information, that investors have proper disclosures and understand what it is they're buying and what their rights are. And so that's why, we very much like working with clients who again want to do it right, want to do it in a regulated manner. And quite frankly, that is the way we architected Toko, with data-rich tokens, where we can embed the legal documents, where we can provide transparency of the underlying asset. Effectively, the token becomes the deal room, the traditional data room that you might have had in a dusty corner of a law firm doing old world diligence. Well, that's now all baked into the tokens. And so, we're really excited about working with clients that actually want to do it in the full kind of headlights of regulatory scrutiny.
And Scott, while we're talking about Toko, can you give us just a quick update on Toko in general and any exciting projects you might have in the pipeline?
Yeah, sure. So it's been a very exciting year where we're coming to you live from Dubai, where I now live. And I always said I'd never live in Dubai. So what am I doing here? And the answer is that we as in DLA Piper and Toko, have worked very closely with the Virtual Asset Regulatory Authority here in Dubai to help them as advisors on building a new virtual assets framework for this jurisdiction. And it's a really ground up, rather than trying to shoehorn virtual assets into traditional finance, buckets of securities and commodities and everything else. They've really designed it from the ground up with, let's not start every project with a question about, is this regulated? If so, which regulator? If so, which part of the regulations apply to me? What they've said is it a virtual asset? Doesn't matter whether it's an NFT, cryptocurrency, a security token, doesn't matter what it is. If it's a bundle of rights sitting on a blockchain, then it's a regulated virtual asset. Here are the rules. I am your regulator. Please follow them. And so we've moved, in addition to supporting with the development of that framework, we've also expanded Toko into the Dubai market, moved a number of the team here, including myself. And we are now in very late stages of getting licensed as a broker-dealer and exchange operator here under this new framework. So really exciting from the point of view of us being able to offer end-to-end solutions for clients like Quarter Homes that can now do distribution of these assets in this market as well. You mentioned projects. Yeah, there are some I can talk about, some I can't talk about openly, but I'll give you a flavour of the ones even where I can't necessarily talk about it. We are working on a number of, central bank digital currency projects. Not necessarily. Toko has not been designed to do CBDC issuance itself, but what we would talk about is sort of digital assets for digital dollars, and we're the digital asset side of that. So it's important as central banks or governments look to do CBDCs or even stable coins in local currencies. What are people going to use them for? What are they going to buy with them? The benefit of blockchain is effectively atomic swaps on chain. So having digitized assets buyable with digital dollars, let's call them, actually makes a lot of sense. So we're working with a central bank in Asia around the tokenization of mortgage interest, for example, at this point in time. And I won't go into much more detail about that, but that kind of principle of actually tokenizing real world things so that they can then be part of the other side of a digital purchase is an area we're working on. There's quite a lot happening in the fund space. I would say funds and real estate are the two asset classes where we're seeing the most amount of news, and that's not just us. I think if you look across the media generally, we're seeing an uptick in tokenization of those two asset classes. They lend themselves to the technology for a few reasons. In the case of real estate, they're often large, non-fractionalized sort of things that actually now can be dealt with in different ways, like the very exciting quarter homeowner financing model. But funds already are almost set up sort of unit trusts with rights in a fund. They're almost fractionalized interests in aggregated things that are within a fund anyhow. So it's a relatively easy structure to then tokenize. I say relatively because nothing's easy as we rebuild the future of finance. And we're also working on equity fundraising. So we've got some equity crowdfunding platform projects we're working on. And we're also looking at doing an equity token offering for potentially a number of our clients, but also for Toko itself. So watch this space on that one.
So some really exciting stuff coming. Toko was one of the first governing council member use cases that we heard about, and I think it's teaching us a couple important lessons. Number one, that it can take a long time before the fruits start to come from those efforts, but when it does come, it can be really big. So you guys have done a fantastic job from the beginning supporting Hedera and obviously making this a fantastic use case. So Shannon, what are some of the next steps for Quarter Homes when it comes to tokenization?
Yeah, so, we tokenized the first property in the United States. We're still moving forward in the United States regulatory system. That's where we've built this model, and we plan to continue to democratize homeownership in the U.S. That being said, like Scott mentioned, Dubai has set up a really robust virtual asset regulatory authority here, and we're really excited about the opportunity to come here, localize this model. Dubai is planning to grow in a massive way over the next 10 years and bring in a lot of really talented people to come and live here, but they're going to need homes and accessibility to home financing. And so Quarter seems like a really natural fit for that. So I'm actually on the ground here in Dubai right now, working on localizing the model to the Dubai regulatory framework. And we're going to be raising funds here and starting to do some properties, which is really exciting. The other thing that, Quarter is building in hand with Toko is a secondary exchange where people can come and start to trade these virtual assets, right? We can tokenize the property, but the value really comes when we can start to create liquidity in that marketplace. And so we're going to be building the secondary market to allow people to come and fractionally trade on properties that exist on the Quarter platform, $1 at a time. So those are kind of the two big projects at the moment.
When you can democratize, access, and people don't have to buy an entire home to invest in the space, it's really going to change everything. And also, Dubai is proving that when you have a smart regulatory environment, fantastic things can happen. All right, so Scott, you coined the term total value represented, or TVR. How important do you think this concept will become in the DLT space?
I'm pretty confident it's going to be very relevant. It's still not, and we don't hear. It's great for you to remember it. Thanks, Brandon. It was about probably a year ago, I think I started coining the term, and it was partly as a reaction.
I'm paying attention.
Yeah, thank you. And honestly, in part, to me, it came from a slight reaction to the fascination with TVL, the sort of DeFi concept of total value locked. And if we look at the ambitions of Toko and the tokenization of real world assets and the digitization, tokenization of everything, you start to realize that there's something much bigger than merely the crypto space. Now, I don't know what today's prices are, but crypto markets maybe $1 trillion today. It sounds like a lot, but working with, Quarter Homes, and we're talking about residential real estate, just residential real estate, just in the US. So one asset class, one fraction of an asset class in one country is $40 trillion. As an asset class globally, we're talking, $200 to $300 trillion. And that's just real estate. And then you start looking at funds, private debt, equities. So, and actually private markets are far larger than public markets. So what we actually have is a perception, even in traditional finance, of the size of markets that's linked to very visible things like stock markets. But actually the private markets are 6, 7, 8, depending on what numbers you look at, times bigger than public markets. So actually we're talking about markets, 600 trillion, 800 trillion. These are the kind of numbers we're looking at in terms of addressable market. Now, how does that get to the answer to your question? Well, to me, what is going to be relevant is when I start entrusting my very valuable asset, whether it's a house or a financial product or an investable, interest of some sort, when I start entrusting it to a blockchain protocol, which one do I trust? And I think that's going to be essential. And if it becomes, when you get down to the technology, the governance, aspects, this is why we joined Hedera so early on, where we looked at it from a technology point of view, from a scalability point of view, from a governing council point of view, and the sort of, validator node and, aspects of the protocol. This is where we think, and we encourage. We spoke to Quarter and said, guys, we'd like to recommend you do this on Hedera, and these are the reasons why. And they believed us, and hence we've done the first token as a HTS token, so that's great. Now, to me, I think that's going to be really critical. Beyond DeFi, we saw the rise of NFTs, and I think they're obviously an interesting asset class. I think they've spawned a whole new generation of artistic types and all of those good things. But when you start thinking about real-world asset tokenization and the hundreds of trillions of dollars, the question of TVR, which protocol do people trust when they put valuable stuff, I think is going to be really critical.
The next step is really going to be measuring this, and we've been talking about spitballing exactly how that would be done. I think the best way to do it is have these different companies that are doing this, Quarter Homes and Red Swan and Aberdeen, Digital Commodities Exchange, just carry, up in the corner of their website how much has been tokenized on a given network. And then that could all be aggregated on a different site, Swirls Labs or, Hedera or the HBAR Foundation, all aggregated. So everybody sees that number all the time. Because I'm with you. I think it's going to be really important going forward. All right. So are there any final thoughts that you have before we let you go? Shannon, I'll let you start.
I think it's just a really exciting time in this space. We are, innovating in new ways. We're using this technology to solve real world problems, and so excited to be partnered with Toko and working on the Hedera protocol. It's just, yeah, great times.
Well, we're happy to have you. And Scott, is there anything else you'd like to pass on before we let you go?
Yeah, I wanted to just really get, I was going to say one thing, but Shannon reminded me of something more important. A lot of what we see in tokenization projects, and obviously we get reached out daily by many people who want to work with us. And what we see is a lot of people trying to do something with tokenization that if you scratch the surface of it, we think we can make some money. And, there's nothing wrong with making money, but what actually is really exciting about, and the reason, our why did we start Toko? We wanted to democratize finance. We wanted to allow more people to participate. We wanted to solve real problems. And so Quarter Homes is a great example of why are we doing this? Because this technology is going to unlock this new financing solution. And this financing solution is going to put people in their own homes. And that's a real problem when we've got global house affordability. So, yeah, this is why it's exciting, and we're actually here to actually make a real difference to what's happening in the world using this amazing distributed ledger technology and great part of the Hedera ecosystem.
Well, we are so impressed with what you're both doing. Congratulations to you both on what you've achieved together. Good luck, and thanks for coming on.
Thanks, Brandon.
Thanks, Brandon. Speak soon.
Great to hear from the Toko there. And I think it's particularly prevalent, especially in the UK at the moment, because we've got this kind of ongoing thought of like a ticking mortgage time bomb, which is, obviously no one wants to be reminded of what that meant last time. But the idea is that, the interest rates keep going up in the UK. The people who got their mortgage at 3% last year or 2 years ago have now gone up to about 5-6%. And so when you look at that and you see these people getting priced out of their mortgage, they can't pay these payments back with each monthly installments. And you look at what Toko did with Quarterly to, bringing in sort of, an alternative financing to mortgage credit. It seems that in the UK, we're seeing how these older methods of mortgaging are, not conducive to the average person, the average citizen. When we go through financial turmoil, it really affects the people who need it, that support the most. And so I think this Quarterly platform, or the Toko platform with Quarterly rather, shows how these untraditional methods really are at the forefront of DLT technology and really are doing what DLT is meant to do, which is bring more accessibility to the average person, bring trust, transparency, and all these different values that we talk about each week.
Yeah, no question about that. And in another space, we have healthcare. At the end of last week, we got a fantastic treat from Jim Nasser. He was highlighted by Coinbase, who, of course, is trying to find the same thing, trying to find value outside of speculation. And Jim came by to tell us about it. So listen to what he had. Jim, before we get into what you're doing with Coinbase, can you give us a quick recap on what Acoer does?
Yeah, certainly, Brandon. We are a software company. First and foremost, we build technologies, predominantly software as a service. Our focus really is to build around some healthcare problems, public health as example, which is a work that is featured by Coinbase. But really, we have a healthcare background. I was the chief software architect at the CDC, and I've worked in clinical research. So that's the focus. And then really where DLT and blockchain comes in is how do we improve efficiencies? How do we make data more trustworthy, if you like, and more authentic? And that's where DLT, particularly Hedera, public DLT makes a lot of sense if you implement it correctly.
It's always been a really good use case for Hedera. So how did you connect with Coinbase, and what's the goal of your collaboration with them?
Yeah, so I think a number of months ago, actually tail end of 2022, so it's been several months, they were doing some research on essentially companies that are using DLT and blockchain in maybe less than the usual suspect approach. So not necessarily DeFi or cryptocurrency or some of the things that we're probably more familiar with. So I don't think there are many examples of companies that are still around who have built production scale healthcare solutions and clinical research solutions or platforms that other people have built on. So I think that was the original point of interest. And I think as we started talking to them, they became very interested in the public health use case, which is the one that was featured. You may have noticed that our client also was featured, and they also spoke about how behind the scenes, blockchain is an element that allows them to trust the data more, yet they get the usability they're looking for. So I think that piqued their interest. And, again, to me, this is something I've spoken about publicly for really many years since my C2C days, that if used correctly, public DLT, public blockchain, token economics used as an abstraction, all of that actually enhances public health data reporting, public health data sharing, and I think we're just proving that. So yeah, I think that's where the interest got started, and obviously they did quite a lot of vetting and research on us, and talked to our clients and made sure that this was real. I mean, we're not inflating the story.
So do you think that Coinbase is interested mainly in just highlighting these value add use cases outside of speculation, or do they have more interest, they want to actually get involved with this space?
I think their interest, in some ways, and I think all of us, frankly, Brandon, in this space, is to debunk this maybe sentiment that there's, that is largely fake or scam and quote influencers who don't really understand blockchain. And I think obviously Coinbase is a big public company, very influential in this space. So they have been seeking stories, if you like, of other maybe more conventional businesses or conventional use cases, really using public blockchain technologies and using it in a way that makes sense for their particular use case. Obviously we see this in the ESG space, the work that Rob is doing as example and has been leading, in sustainability and things like this. So to me, what we're doing is just another example of, of maybe either more conventional kind of businesses and industries or non-conventional uses of blockchain as people understand it.
So Jim, what can we expect going forward? Is this going to be an ongoing campaign with Coinbase?
I'm not really sure, to be honest with you. I think they're interested in promoting these building stories, or the builders, if you like us. That was really the premise. I believe that I've received a lot of good feedback. So, hopefully. So I don't think it's kind of a, like a snapshot type thing or a one and done. I think that they have belief in these series of use cases that accentuate ways you can use and get value from public blockchains in the long term. And obviously that's the business they're in, promoting at least the exchange side of the underlying tokens.
Well, I think, of course, Hedera has many different use cases that are value add, again, outside of speculation. We have Neuron with Internet of Things and aviation. We have supply chain use cases with Atmio and Fresh Supply Co. And the list just goes on and on everywhere. Again, another use case in the healthcare field in the UK. Hopefully, they'll just see this as a hotbed of things that they can tap into to just show all the regulators out there, all the great things that can be done with DLT. So, Jim, the way we've seen some of these, use cases pop up, they focus on tokenomics because of the speculation aspect of it. But how would you frame tokenomics around more conservative use cases like your own?
Yeah, that's a very good question, Brandon. So, especially now with this current climate, I think the approach that we have taken, and we have done it with one of our clients called Health Ready, which I think you may feature at some point, it's much more of a conservative, what is really an inflationary token model where we mint a certain number of tokens. We basically put in escrow a certain amount of money, US dollars, that's equivalent to tokens that are minted. So essentially a proof of reserve. And then as the tokens are used, for instance, for incentivizing patient recruitment or patient data sharing, then those tokens are burned once a reward has been redeemed. And then once that's done, we basically remint. So it's pretty conservative. There is not this kind of exchange idea where the price of token goes up and down. It's really like a stable coin, if you like, in some way, without calling it a stable coin. And the real idea is we give the patients, in our case, what they actually want, which is maybe points or US dollars or whatever, something that they actually understand. But yet at the same time, we use the power of a public DLT and in this case, Hedera token service to create a real token, associated value to it, and then publicly and transparently show how it's being used. So that's the approach that we've taken. It is much more conservative. It does require a lot more discipline financially to have proof of reserves. But we think for the current climate, for sure, that it is appropriate for the kind of work that we do.
That makes so much sense. Jim, congratulations. I think the true utility that Acoer and the rest of the Hedera ecosystem brings to the space will start to get the recognition it deserves, and this campaign might be the start. Thanks for stopping by and telling us all about it.
Yeah, thank you, Brian. I appreciate it.
A great surprise for us all there. Coinbase clearly are taking a direction of, we need to prove that there is value in this ecosystem, in the ecosystem of the assets we support. And I think for them to show their first sort of testimony to this, for the first use case to be with Jim and Asa on Hedera, is great news for us. It's great news for Jim, it's great news for the product, but great news for all of us in the community. HBAR was only listed sort of a little under a year ago, I think. And so for them to realize the utility of HBAR, of Hedera, it feels like these two pieces are coming together. And I'd really love to see more of these kind of spotlights. But for them to do the first one with Jim is of course really impressive, and testimony to both Jim and Asa there.
Well, as I alluded to, if Coinbase does want to focus on these use cases that are outside of speculation, Hedera is going to be a hotbed of different things that they can focus on. So hopefully, like you said, there is going to be more of that to come. All right, I told you we were going to have back-to-back thought leaders here. We have Max Walker-Williams, who is also building in the space. He started out supplying fantastic content, and now he's actually building in the space. He's working on a marketplace called Mint Condition. So let's hear what he has. Max, you and I took similar paths into this space. We were investors first, and then we created content all the way to becoming builders. Can you tell us what took you down that path?
Yeah, so first of all, thank you ever so much for having me on again, Brandon. It's good to see you looking incredibly well. And it's always good to see that smile. It's amazing. So yeah, you're absolutely right. For me, the difference was COVID. So I had and still have, a large group of Web2 based businesses. And I was just way too busy working never less than 80 and sometimes as much as 105 hours a week in those companies. But when COVID hit, I knew about being a bit of a geek, although I don't look like one. I am definitely a geek. And I was, I've always kept an eye on crypto. When after DigiCash fell away and then Bitcoin came along, I thought, I couldn't see what everyone was saying at the time, which is it was going to be new money, etc. But the tech was undeniable, and so I thought it isn't what, or I at least don't think it's going to be what everyone else does, but I do think this is the start of something massive. And then cryptography has just grown and grown, and then Lehman solving the asynchronous Byzantine fault tolerant meant, like when I saw Hedera for the first time, I knew exactly what it was, and it was kind of what people thought Bitcoin was going to be in the beginning, and that's what it is, really. And so, again, I was too busy with the businesses, but then COVID came along and my workload dropped to like 40 hours a week. And I was like, what the hell do people do for the rest of the time? Like,
Sure.
As you know better than anyone, I love to talk. And I was starting to make Big Boss like go crazy. So she just said, why don't you go and talk to a camera? Like get started up a YouTube channel. And then from there, I met loads of really interesting people in the space. And they said, more and more people were saying in the community, you should be building something on Hedera because you've got a lot of business experience in sort of what I call the real world, Web 2, and and we need good people building on Hedera. So I started thinking about it, and then I got approached by a couple of devs who I knew through my previous businesses, my existing businesses, should I say. And it just went from there. I was fortunate enough to have some people I consider friends that I've met along the way in my companies who are now founders, co-founders, or really, really high up management in some really big companies. So in my phone, I've got loads of Web2 business owners, and I've also got loads of developers. And I thought, if we bring these things together, what have we got? And so we set up a company called Utopian Lab, which has been doing really well. And we effectively help some of the largest and best brands in the world and talent enter the Web3 space. We hold their hand, and it's a complete turnkey service. So for me, turning up to a company, explaining to a load of directors what Bitcoin is and sort of what crypto is, and then explaining why Hedera answers a lot of their concerns around the environment and alike, security and all the other things that are important to big businesses. And then from that, the same question kept coming up more and more with our customers, with our clients, which is, where are we going to sell these? And that's how mintcondition.com was born.
So now let's go into some more detail around Mint Condition. What is Mint Condition, and why should people be excited about it?
Okay, so mintcondition.com is a curated marketplace. People know me. I shouldn't have to say, but I will anyway. I'm all about the community, and I'm all about engagement and inclusion. So although we're a curated marketplace, meaning that you can't just upload your stuff and go, you can apply, and as long as it's not offensive or anything too unusual or weird, then you're more than welcome. And in fact, we've quietly been reaching out to creators already in the existing Hedera ecosystem, NFT ecosystem. And I'm really, really grateful to say of the 32 people that we've approached so far, all 32 have said they'd love to be involved. And then the reason it's curated is because whether we like it or not, if we want to win, as it were, or be in the top 5 or top 3 or the platform for retail and digital assets and NFTs, we need big use cases. We need enterprise. We need corporations. We need brands. And the same thing kept coming up over and over again with Utopian Lab when talking to these huge brands, which is, Inchcape, for example, $13.2 billion company turnover last year. They represent Jaguar, Land Rover, Mercedes, Porsche, etc. And when we're having conversations with them, they're saying, look, we understand that this crypto thing's not going away, that Web3 is the future, and we understand the potential to engage with our clients in a way that's simply never been possible before. However, we are not interested in, and we understand too that Hedera ticks all the boxes. So we get that. That conversation's over. We get it. But we'd rather not do the Jaguar F-Type 60 edition, a very, very special car. We'd rather not do an NFT merchandise giveaway offering of that type than see it next to a swastika or a penis or whatever else might be for sale on OpenSea that they've seen.
Sure.
And if you go on these marketplaces, you type in Jaguar and 350 fake, or not fake, but unofficial, if you like, Jaguars come up. And so they dread seeing their beautiful official Jaguar sat on a shelf surrounded by unofficial Jaguars and by swastikas or whatever it might be. So they want a safe space. The other thing they want is huge engagement because these companies don't want to be embarrassed doing a drop and it not selling out. And so we're really, really hoping that we can get the support of the HBARians and the Hedera community to really rally behind us, come to one place and help us prove to brands that Hedera is the home of retail. And if we can do that with a couple of launches, a couple of successful launches, it's just going to skyrocket from there because Hedera's got the tech. Okay, so the big corporations, the big companies, your McDonald's, your Apples, your Coca-Colas, your NFL, they know of Hedera for the most part. Certainly the people we've spoken to now know about Hedera, but that's not the technology is not enough. You need to have it's all very well and good saying we've got the best building firm in the world and we can build this shopping center, this mall. But if the mall hasn't got any customers, or if the mall has operators in it that don't sit with the brands, they're not going to open shops in there effectively. And so Hedera is the best technology, in my opinion. And we do have an incredibly passionate community, but we need a place, a safe space for these brands. And that's what we're hoping mintcondition.com is going to be.
Essentially, we have to make sure that success breeds success because that's what happens. And we need to cultivate that kind of success. So has building on the network changed your opinion on Hedera in any way?
Truthful as always, yes and no. Things have changed recently, but if you asked me this question maybe 12 months ago, I would say, yeah, there was a real barrier to entry for people who even really well-versed and experienced devs like our team. There were a lot originally. There was no coherence. So what that meant is if you imagine like a huge jungle, there were all these devs standing on the edge of this jungle, and then they were cutting into the forest and going down a path. What there should be is a path that's already been laid by devs that have already done things and worked out that this way doesn't work. That's a smoother path. This is a rocky terrain, etc. And if you can follow the path of another dev, it saves you all that energy of chopping the same trees to get to the same place. And so there was no coherent path, if you like, to follow. And people in the community and some of the guys at Swirls Labs have been leaving stuff, but my guys would be following instructions and then find out that it's out of date. It no longer applies. So they get all the way down this rabbit hole. It's technical stuff that I don't understand, but the kind of the way they explained it to me was they'd follow these instructions, almost do like a day's worth of work, and then find out that actually there's a more efficient way of doing that, and they'd scrap it and they've lost a day of work. So if Hedera had like a really, really good go-to place that was a well-laid path, that people in the community who want to leave breadcrumbs behind them for people to follow, they can do. One coherent place where they can say, so my guys can say, this is how, so when you come on our website, mintcondition.com, and you go, wow, I love the way that works. How did you guys do that? We can refer you to a site, in Hedera, and it's okay, this is the journey. This is what we have to do to get there. Rather than you trying to go away on your own and emulate it, and it take you 6 months. because we can win if we can stand on each other's shoulders, because that's how giants are made, rather than everybody trying to cut their own path through the forest.
Yeah, makes perfect sense. So you are calling on the Hedera community. How should people get involved with mint condition?
Yeah, great question. Thanks very much. So all the usual, really, just the website, www.mintcondition.com, which took 8 months, by the way, of negotiations to secure. But I think it's a fantastic domain because, look, what we've got to be very careful of is alienating Web 2, because there might be 10, 20,000 active users on the Hedera ecosystem. But one of our clients, and I can't announce who they are yet, they're signed up, but they want to announce at the same time as us. So we've got a plan we've got to stick to. But they have 7 million customers. One of our clients has 7 million active customers with all, they've got the email addresses, they've got all the stuff. So we have to make sure that those 7 million people can come to Hedera, because we want them, of course, we want them on our platform, but we want them looking at, Twigital. We want them looking at Dead Pixels. We want to bring this tsunami of people into Hedera and just lift all boats rise, okay, and just lift everything up. But to do that, they've got to be able to get on. So we didn't want to be called anything that suggested crypto or NFT. And that's how the domain name came about. I'm going to get to your question in a second. So mint condition, but the reason I love the name is because if I ask you in 6 months' time, Brandon, and you're drunk, what's the name? You'll remember. Yeah, I know you'll remember. Even drunk out of your mind, you'll remember the name. Secondly, it does make a nod to NFTs because it's mint condition, and you mint an NFT. It's a bit of a play on words because it's all digital assets. So, of course, they're in mint condition. And any self-respecting collector, I come to you at a fair and I say, I've got this 1961 Spider-Man comic book, first edition with the error on it. Your first question to me should be, what condition is it in? And the perfect answer I can give is mint condition. So
there you go.
How do people get involved? So visit the website. There's a sign-up form where you can leave your details. We'll keep you updated. Of course, follow myself on Twitter at mwalkerwilliams, because I'll be doing a lot of updates on there. And of course, follow at mint condition TM on Twitter. We're doing loads of giveaways as well. I don't know if you saw the one yesterday, but those guys, they're giving away 1,000 HBAR every day for 30 days to 30 lucky winners. And you can actually win another 500 HBAR if you've got your PFP, your Twitter profile picture, as their logo. And you just hashtag mint condition and you get an additional entry every day. So, and by the way, that's the first of, there's so many competitions, but I'm going to have to tell you off camera because I don't want to spoil the surprise. But it all leads to the biggest, I think, I don't have to check, but I think it'll be the biggest giveaway to ever happen on Hedera. And I can't wait for people to see this.
Well, Max, you are an absolute force. Thank you so much for swinging by and telling us about mint condition, and thank you for all that you do in the space.
Ditto. Thank you so much for everything you do, buddy. You do what you do so much better than what I do. So I love having you in the space because, one, you're informative, and two, you give me somebody to aspire to. So thank you very much for that.
I appreciate it so much. We're just pushing ourselves all in the same direction. Thank you again so much, Max.
100%. Thank you, buddy. Take care.
So yeah, Zep, since Max and I took similar paths, I feel like we're kind of kindred spirits. Do you have any thoughts on what he's working on?
Yeah, of course. I mean, Max is a full-time HBARbarian, and it's great to see him now building and building out his passion in this community and in industry. And so he's, working with some of the great fine art studios in the UK. He's got all the customers that he spoke about in the clip. But I think what really differentiates Mint Condition from, say, Zeus or Hashaxis or Hash Guild or Sentience is that it's got this more of a focus on these sort of more, I guess, traditional artists, traditional products, more sort of real world assets in the sense of real world art, this of course of NFTs, but also signatures, these kind of things, valuable objects or assets rather than pure sort of PFP NFT art. And so for me, we've needed this kind of space, if we want to attract. Of course, it's great to have the PFP artists. They're a massive part of any Web3 ecosystem, and we have a great one in particular at Hedera. But to attract, say, the artists that might come in through LG Art Lab or get interest from the artists that are showcasing on LG Art Lab, they need somewhere where it's, I guess, more serious in a sense. Serious meaning more traditional, I suppose. There, it's not to say that PFP aren't serious in their own rights, but I think to have a sort of place where this more traditional work can be showcased is very important, and a piece of our ecosystem which we didn't have. So I'm looking forward to see what Mint Condition come up with there.
And I see a lot of collaborations actually with Mint Condition and Twigital because of a lot of things that we're working on. We're looking at working with enterprises. He's doing the same. Some really good news around Twigital is we just got approved to go into the App Store for Apple. And you sent me some information this morning, actually, talking about what they're trying to do for developers, how developers should think about interacting with these immersive spaces. It's right up the alley of what Twigital's trying to do. So we're really excited. We're excited about what Max is doing. All right, so next up we have Rob Allen and Shark Bites. He wanted to go down a little bit different path this week, try to get some questions from people in the audience, and he addressed them to the T. He did a fantastic job. So listen to what he had this week. Welcome back, Rob.
Hey, Brandon, how are you?
I'm doing very well. I heard you took a little bit of a trip. Where are you calling from?
I'm with the Hashgraph Association team in Zurich this week. We've been working remotely for the last couple of months since I joined, and it's awesome to be able to get together with my team and progress some of these amazing use cases that we're pushing forward with.
Yeah, well, have fun over there. We're going to change the format up a little bit this week. We're going to take some of the audience questions.
Yeah.
The first one comes from Alan. He said, in late 2022, the ASX company aborted a 7-year-old blockchain conversion project of the Australian Stock Exchange's CHESS clearing and settlement system. They wrote off 165 million Australian dollars, and it's actually been reported to be an even larger figure. Is this a massive fail for blockchain tech in general, or a possible opportunity for Hedera?
Well, first, thank you to everyone for the questions. That we scratch our heads every week about what we're going to talk about, and then I just go off on one. But it's great to be a lot more pointy, and hopefully we can do this every week. I'm very open to AMA. We used to have a great time actually posing questions to Manson Lehman in those town halls. So I think the community needs some kind of voice to ask and answers from Hedera leadership. So hopefully I can provide some of that. So the CHESS replacement. Okay, a bit of background for people who aren't aware of this. The Australian Stock Exchange is just that, the stock exchange in Australia. It's got an old system that handles post-trade settlement called CHESS, and so they thought it would be a great idea to replace that with newfangled blockchain technology. This was back in 2014, 2015. So for those of us who are kind of around in those days, you may have remembered a lady called Blythe Masters, who came out formerly of JP Morgan, I think, and was talking about the benefits of blockchain to what is a very, very complicated use case, post-trade settlement, lots and lots of parties, lots and lots of rules. And digital assets, or digital asset holdings as it was originally called, were part acquired by the ASX and by Accenture and a bunch of others to actually implement this change. So that's a bit of context in the background. Over time, that became, in 2014, 2015, Ethereum had only just been launched, right? So this was really, really early. And we had this sense from institutions and corporates that why would you use a public ledger? We have to go private. So all of this technology became a kind of private permissioned layer. And then what, as often happens in kind of rarefied walled gardens, it changed without the exposure to open source and the challenge of a kind of developer community. So it became less and less like a blockchain and more like a ledger. Very, very difficult use case. Over time, and as Alan, the questioner, said, over about 7 years, that became a difficult project to land. And ultimately, the ASX pulled the plug. Now, it doesn't mean that it pulled the plug on all blockchain. And there's a very smart head of digital assets, a guy called Paul Stonham, who's a friend of mine who runs the ASX digital assets business. And they've kind of pivoted and moved towards a blockchain as a service kind of offering to their hundreds of partners around the world. That offering is kind of agnostic of the underlying ledger. So, of course, Paul and I talk quite regularly, and there is absolutely a role, I believe, to play for Hedera in that architecture. It's a system called Symphony. It has Canton, which is the blockchain kind of child, I guess, of the original digital assets technology. and as kind of smart contract layer, if you like, called DAML, which is particularly good actually. All of these things come together. I think there's a very good way of integrating Hedera, but we're not quite there yet.
Well, I'm sure we'll get there. So, Rob, the next one comes from OakBZ. He said, I'd love to hear Rob Allen talk about specific governing council member use cases. Just cover a couple council members per Shark Bite about what they're doing. Feels like we don't hear much about what they're working on, and some council members haven't been attending many meetings. Anything he can share would be appreciated.
Well, I can obviously tell you, but then someone would put a hit on me, no doubt. There's a lot of work happening behind the scenes, and I know we say that, and I know we say that enterprise delivery has long lead times, and that there's a lot of commercial sensitivity about these things, and it's true. Those things are all the case. There are, as we all know, some very high-profile governing council Hedera production use cases. Clearly, we know Avery Dennison and the 1,000, 1,200, 1,400. Who knows from one day to the next where it's stepping up to. Transactions a second is quite incredible. Plus, there are elements of sustainability in there. So we've got some not only a world-class blockchain use case. I would say this is the world-class blockchain use case. I cannot think of another enterprise use case using blockchain that is better than that particular one. So, I mean, we should all be proud. Very few of us have had anything to do with it, but we should be proud that, within our ecosystem, we have got the very pinnacle of current achievement in blockchain, and that's the Avery Dennison Atma.io production system. Their product cloud system, which uses the Hedera consensus service and the Hedera token service, although at the moment most of the transactions, in fact nearly all the transactions, are Hedera consensus service ones. Watch this space for the tokens. Now I'll certainly get a hit taken out of me. And then, of course, we got Aberdeen. Just a couple of weeks ago, we were talking about this amazing use case. Aberdeen, one of the largest fund managers with assets under management in Europe, actually UK based, and how they're tokenizing their fund. So that's a real world use case at the non-high volume transactional level, but the very high value, the value represented is incredibly high, and just the first of many, I have no doubt. Then we've got the OGs in the similar space. We've got DLA Piper, who have created their Toko platform under the OG of OGs in Hedera, Scott Teal, and which is a security token platform, and they all sorts of legal contracts get fed into that machine, and it emits tokens out with security tokens out the back. So that is a more of a general purpose platform. We've seen all sorts of uses of that, from the tokenization of art and assets through to other types of assets and real estate more recently with Quarter. ServiceNow is a favorite of mine, because when I was at PwC, we used to see so many of our clients embedding ServiceNow as a business workflow tool and engine. ServiceNow really is kind of behind the scenes of most of the Fortune 500 businesses, and it's now integrated. So, and they're huge advocates and champions, very vocal champions in social media of the benefits of integrating their process flows with Hedera, not only in terms of data provenance and notarizing of data points within the flow, but also sustainability and emissions tracking and integration with Guardian. So that's for me an incredible use case, and not a specific business, but in a kind of in the box, behind the scenes, enabling Fortune 500 businesses and equivalents across the planet. Amazing. LG, how can we forget LG and the beautiful fine art NFT art labs that they have, putting NFTs and very high quality NFTs on all of their devices. That's a brilliant use case for Hedera at the consumer engagement end of the spectrum. And then we've got other council members who may not bring product to market, but bring Hedera-based service to market. UCL, of course, has published 2 massive papers on the sustainability of the network. Their governing council member has set up the DLT Science Foundation. So, they're actually walking the walk in terms of taking Hedera and DLT into the market, into the ecosystem. And then we've got IBM, we've got Wipro, we've got Tata. They actually act as systems integrators as well. So they work with their clients to bring Hedera to market, often without shouting about it. In fact, pretty much all the time without shouting about it. But if you have a look at the Hedera systems integration or system integrators webpage, there they are. They're working with our partners and bringing product to market. And then you've got all the stealth projects, the ones that I'm seeing through the Hashgraph Association's enterprise program. And clearly I can't name names, but I'm seeing digital identity projects, a bunch of stablecoin projects, payments and cross-border and remittance type use cases. You can maybe guess who those are. Oracles, proofs of reserve that relate to the stablecoins. We've got rewards and consumer engagement use cases that the council members are very clearly focused on. And then, of course, sustainability. The ESG obligations of all of these businesses are very strict, and we have a ready-made solution in our Guardian ecosystem for dealing with that. So I talk to all of them. Wes talks to all of them, and we're moving towards use cases around green bonds, ESG reporting, or purchasing of carbon credits and associated credits for offsetting their operations. So in all of these ways, the Governing Council are actually creating use of the network. They're locking in value in the network, and they're creating network effect, even though it may not be obvious all the time that they're making big announcements and rolling out production solutions. And like I said, I've got a long pipeline of these things, and they're all going to be coming into market, over the course of the next year, 2 years, however long.
And one thing of note, a lot of these initiatives from the governing council, they can be thought of as like startups within the enterprise, right? And we know that most startups don't work out, but we only need a few of these to work out to have a huge impact on the Hedera network. All right, so the next question is an interesting one. It comes from Eduardo. He says, is it good or recommended to have other crypto projects in the governing council? We have Chainlink, but what's the impact of them on Hedera?
Well, we don't have other chains on the governing council, and the Web3 space has many, many participants. At the time where Chainlink were brought onto the council, and still today, it was seen as beneficial and is beneficial to have these additional perspectives. Of course, we are a Web3 ecosystem, but enabling Web2 to Web3 transition. So all views are valid. The governing council, as we know, is designed to provide the best kind of decentralized governance on the planet for distributed ledger technology networks. And so why not include Web3? It's not a direct competitor. It's actually additive and provides value within that governance framework. So we've got, we're decentralized by sector, by geography, by time zone, and by, the spectrum of Web 2 to Web 3. So absolutely, I think there is a very valid role for Chainlink and other Web 3 businesses that may or may not be joining the council in the near to medium term.
I completely agree. So the last one also comes from Eduardo. He says, what's the relation of Hedera and CBDCs?
Eduardo, you win the prize this week for the best questions. Thank you. So the relationship between CBDCs and Hedera is not necessarily obvious, but is absolutely there. So let me explain a few things. So CBDCs, central bank digital currencies, are assets, fiat-backed assets usually, on ledgers that are issued by central banks. So they tend to be digital assets. They don't have to be on blockchains, but they tend to be. And they are probably the least risk fiat-like asset because they're issued by the central bank of that particular jurisdiction. Now, they tend to be differentiated by wholesale and retail. So wholesale CBDCs are used to interact between commercial banks and the central bank for settlement type use cases at that level. Retail is like cash, right? It's a digital version of cash that citizens within that jurisdiction use for all the sorts of things that we use cash for. Wholesale CBDCs are much easier to implement. Retail ones or a full spectrum of CBDCs are quite hard. It's quite a heavy lift to change one's financial system with unforeseen risk inserted into that financial system by putting a retail CBDC in. And many jurisdictions are looking to stablecoins or privately issued stablecoins issued by banks that are regulated potentially to fill that gap. So wholesale CBDCs, stablecoins are a part of the fabric of the future financial systems. So where does Hedera fit in all this? Well, we've probably got, if not certainly got, the most flexible network in terms of architectural implementations. And what I mean by that is if there's a wholesale CBDC implementation, then and it's determined to be private and permissioned, we can deliver private permissioned versions of Hedera. In fact, that's where Hedera started back in the day prior to the full public open access worlds, was testing Hedera in its private permissioned state. In fact, talking to a lot of central banks and banks about this very use case, CBDC. So it's kind of in the DNA of Hedera. However, if we want to provide some kind of hybrid architecture whereby you've got a permissioned layer and that permissioned layer is secured against the public network, because we know that the public network is far more secure than a private one, then we can do that as well, either through an AppNet, so an application network layer secured via the Hedera consensus service against the public mainnet. Or now, given that we have full open source for the entire stack, potentially, and this hasn't been implemented yet, but I envisage an architectural pattern where you've got a private version of Hedera itself secured against a public version of Hedera. It's a very possible architecture that in the very near future, I think we'll be able to implement. And then, of course, we've got the stablecoin aspect. So if stablecoins are being issued within that jurisdiction, then a pretty easy way of implementing full new financial fabric within a country would be to have a CBDC on Hedera and then stablecoins issued on Hedera too. So the interoperability becomes a lot easier. In fact, we saw in the recent Australian Reserve Bank of Australia CBDC pilot, which had 14 projects, one of which was Hedera based. Many of those projects were actually stablecoin projects where the stablecoin was collateralized with the CBDC. So the ultra risk-free CBDC asset was collateralizing the stablecoin, and then we could do things within the public network. So there are many ways that these things can be implemented. And what's really exciting is that over the course of the next few years, as more and more central banks and countries start implementing CBDCs, I think we'll see some of these things become demonstrated and then implemented. And finally, on CBDCs, we can't talk about CBDCs without talking about MTech. Kamel Cadet and MTech are the poster children of the Hedera pantheon of great startups. And MTech is now, I think, in 6 countries with its CBDC sandbox. So those sandboxes are enabling reserve banks to test, to work out what their primary use cases are, and to get their hands on the Hedera technology. So I think Carmel is leading by example on all those things.
Yeah, I think MTech is going to be really important on a few different fronts, but especially because just like we talked about in the first question, exchanges moving to a DeFi type model. We have DCX, Digital Commodities Exchange, that's doing that. And for larger exchanges, they're going to be kind of an example of what can be done. I think the same thing is going to happen in the CBDC space. Smaller jurisdictions, smaller central banks are going to be able to be more nimble and try new things. And I think that's where MTech is focused right now, but they're going to act as an example of what can be done for some of the larger economies that are out there.
Yeah, you can't sell CBDCs off of PowerPoint decks. You really need to demonstrate the technology, allow it to be experimented with, to be tested, to get maybe people who are not, super technically minded comfortable with the technology and what it means and how it can be used. So there's nothing better than having a demonstrator in an environment where people can come and play. That's exactly what Kamal's doing with the sandboxes, and MTech is leading the way for us.
Absolutely. Well, Rob, I love this format. If anybody has any questions out there, you can drop your questions down in the comments. Rob, thank you so much for swinging by, and we'll see you next week.
It's been great fun, and keep the questions coming. I'll answer the ones that are really easy next time. Thank you.
All right, Zep. Well, Shark Bites can certainly stand on its own this week. Let's get into some other Hedera news. Hashpack had a couple things that came out this week. Do you have anything on that?
Yeah, so Hashpack's much anticipated audit has now come through. Most used wallet by the community, by this ecosystem of dexes and so on and so forth. And so for them to have this behind them now is massively valuable and massively important to us all. And you can see the findings in their own report, in QuantStamp's own reports, but now you can officially say that Hashpack is the most secure it's ever been, and with such a revered firm as QuantStamp is very important there. Alongside the QuantStamp audits, they came out with XX Network, and XX Network is I've heard through King Solomon Spaces. I think he works closely with them. The first sort of quantum ready layer 1 blockchain. So a lot of what they do is around security and so on and so forth. And so they've teased a relationship with Hashpack. We don't know what that is yet. We don't know how they're working together, but definitely want to look out for there. And it's definitely got some excitement within the community.
Yeah, they're amazing builders in this space, and we have so many of those different teams. Another one, of course, is hgraph.io with Patches. He had some information that came out this week as well, and it was actually working with the Bitcoin network. What do you have for us on that?
Yeah, so one of the biggest trends at the moment has been Ordinals, which is sort of Bitcoin's own NFT sort of ecosystem. It's got news for two reasons. One being that no one knew this could really happen. Of course, we had sort of colored NFTs or colored Bitcoin, but this is now very much its own sort of ecosystem in its own right. Real NFTs on chain. And this slowed down the network, caused a huge amount of congestion, but it hasn't been edited out yet by the core devs. And so it's still there. It's still got a massive hype around it. There's this idea of Ordinal Summer that's coming up, similar to the DeFi or NFT summits. And Patches has somehow managed, through his own ingenuity, to bring Hedera into the fold there. And so I think he was on a space with about 2,000 Bitcoiners, community members, so on and so forth, showcasing how he's managed to do the first token-gated Ordinals vote on Turtle Moon using the Hedera consensus service. So they've used Hedera as the trust layer for creating the first vote on the Ordinals via, of course, the Hedera ledger, but through his own Turtle Moon. They got in Hungry Baboons there. They got HCroft Punks as well. They managed to really bring two massive ecosystems together, or Bitcoin being the bigger one there, but brought Hedera into the fold and really showed the full breadth of Hedera utility and how it can be used by anyone, even Bitcoin. So that's fantastic, and massive props to Patches there, of course.
Yeah, Patches is an absolute force. He has done so many good things so far, but I think he's going to have so many more great things in the future. And this is an example of what he's working on. All right, so the other big news we had this week is, of course, Karate Combat. Karate Combat has Karate Combat 40, the big event coming out on Saturday. They, of course, have been doing a lot of promotion around that, but they are also, because a lot of this stuff, almost all of it, is built on top of Hedera, they wanted to bring our NFT community in. And to do that, they did a massive airdrop. Over $175,000 worth of the Karate token went to too many NFT projects to name in the space. So it's just fun to see. It's going to give people some karate to play around with their up-only gaming this weekend. You can download their app right now and participate in Karate Combat 40 in their up-only gaming. You vote for who you think are going to win. If you're successful, you get more tokens. If you're not, you don't lose anything. So again, we've talked about that a lot in the past, but I think they are really onto something here, and they are trying to engage as much as possible with the Hedera ecosystem. All right, let's go ahead and get into some network analysis. So over the past 24 hours, we've had 117 million transactions with a max TPS of just under 4,000. The average TPS has been higher than we've seen recently at about 1.4 thousand transactions per second. Now, I think what's causing that is there was a time when it looked like Atmaio came offline for a while. I'm not sure exactly what was happening there, but I think they had a lot of queued messages that are now hitting the network. That has us ramped up a bit. So over the past week, we've seen 668 million transactions and a max TPS of about 6,000. Time to consensus is just about 5 seconds. And we've had just about 30,000 accounts created this week with 36,000 active accounts. And we've seen a pretty good spike in the recent days. Any thoughts on that?
I think, again, attributing that probably to Karate Combat there. We had their NFT campaign. We had a lot more people. I've seen Mason Vasulius, who's one of our big influencers. I've seen Crypto Wendy, who's from CoinDesk, another big crypto influencer. I've seen a lot of people talking about KC this coming weekend. So I imagine it's the effects of all these new people hearing about it and, again, coming to check it out. And we also had Samuel Eriksson, who's got a massive following on Instagram. He's actually put out on his Instagram a promotion of the Karate Combat app, both on his story and on his profile, just 670,000 followers. So I think lots of different things there, lots of new people hearing about KC, and that's that's only just getting started. We're really seeing that momentum pick up. I'm sure we're only going to have more of that going forward.
And that's reflected in our fungible tokens as well. Karate Combat is at the top over the past week with over 50,000 transactions. Also, with a significant amount of transactions, we have Wrapped HBAR, Energy Trade Token, Zero, and Sauce. And rounding out the top 10, we have Dovu, XSauce, USDC, HeliSwap, and Jam. Moving down to our NFTs, we have the Crypto Show that is making a showing in the top spot and in the number 3 spot. Number 2 is that $ codes, which I still need to do some research on. We also have Dead Pixels, Hangry, and Earthlings all in the top 10 as well. All right, Zeb, do you have anything to get into when it comes to the NFTs?
Yeah, so we had a lot going on in the NFT ecosystem this week. We had Legends of the Past. They had their latest mint for the Infinity Jar. We had Lethos, of course, the AAA gaming studio. They've got their own digital collectibles collection now. These are high value, real world art from big names that you should definitely check out. And then we also had the Dovu Black Hole Protocol. And I saw someone write in the comments, this is sort of Apple level marketing in terms of name recognition, name branding. The Dovu Black Hole Protocol is fantastic. For what it is, this is a way of burning NFTs on Hedera. That includes, in the case of Dovu, for sort of purpose built for retiring carbon credits. But also this can be used by the community for people who have old NFTs they don't want anymore. They can sort of banish it into this black hole and sort of say au revoir, and it's gone. No more in your wallet. Goodbye. A great addition to the Guardian ecosystem, but also the NFT ecosystem.
All right, Zep, and the other thing we have going on this week is the brand new Seedrick campaign. You can check out Seedrick. You've probably seen him throughout this video. He's part of the Aniseed project, and Aniseed is bringing these real-world conservation NFTs into our space. They're doing all kinds of really cool things in the gaming space, namely starting off with Earthlings, where your sidekick animal or the forest that you're walking through or the well that you're interacting with are real world conservation NFTs. I'm throwing an additional 1,000 HBAR into the prize pool, but you're also going to get that NFT. Here are the rules. I'm also going to put the rules in the promotional tweet for this weekly update, but mainly you just need to go and take that number that you've seen Seedrick holding up and you put that into their Discord, and you're going to go from there. But I hope as many people can participate as possible. So this is going to be a fun one. All right, with that, let's go ahead and get into some DeFi. Looking at DeFi Llama, not including stated liquid staking, the total value locked in the Hedera ecosystem has had a nice bump up to $26 million. SaucerSwap is up the most over the past week, 18% to nearly $18 million. Pangolin is up 15% to about $5.8 million, and HeliSwap is also up about 15% to $2.5 million. Looking at the returns on some of SaucerSwap's popular trading pairs, HBAR X is at 12%, 28% on HBAR Sauce, 31% on HBAR USDC, and 66% on HBAR Karate. That said, I don't think you want to provide liquidity when you have the ability to participate in up-only gaming for Karate Combat 40. If you're still in the liquidity pool, it's too late. But for the next event, I would make sure you have your Karate in the wallet of your Karate app for the snapshot, which is generally 2 days before the event. And make sure to vote before the deadline, which is just a few hours before the fight starts. Moving moving over to Pangolin, the average APR on HBAR USDC is 69%, and my personal return is just under 40%. HBAR PBAR is at 37%, and HBAR X is at 17%. And now onto the crypto and HBAR markets. Due to the news out on BlackRock's Bitcoin ETF and EDX that we discussed earlier, crypto has had a great week, with Bitcoin up 3.5% over the past 24 hours and 18% over the past week. HBAR has done even better, which is a bit surprising in my opinion, being up 5% on the day and 20% on the week. Normally, I would expect most alts to lag behind Bitcoin on a move like this and catch up if Bitcoin holds on to its gains. So HBAR's performance has been impressive. At the time of recording, HBAR is between 5.2 and 5.3 cents. When we first peaked above 5 cents, I highlighted how it was a key level and it would be interesting to see if it acted as resistance or would flip to support. And now it's clear it was the latter. And looking at the 1 hour chart, we've already had a good test of that level. If we continue north, I would expect resistance at 5.8 cents. All right, Zep, that's pretty much all we have. Is there anything else you'd like to pass on to the community?
We've seen over the last 2 weeks the institutions are back in the game. Not that they ever left, but they're out of hibernation. They've found it's time for them to poke their heads out and give us this sort of, the momentum again that we might need. And of course, when you think institutions, you think Hedera, and we've seen that this week. We had Toko, we had, Jim Nasser with Coinbase. We've seen Max come on with mint condition. We know that Hedera is building for institutions as well as retail, of course, but we're getting more and more momentum. As Sharky Rob highlighted himself, we have all these use cases behind us. And when you pair the institutions that are moving into the space with the institutions that are building on Hedera, we're getting closer and closer, I think, to those sort of relationships being forged. And I think Hedera getting that kind of recognition it deserves, as highlighted by Coinbase, of course, coming out with Jim last week. But, even beyond institutions, we've seen the fantastic work of Patches, we've seen Hashpack, seen Karate Combat, these real bastions of the Hedera retail community. They just continue developing, they keep on building. And I think when you combine the institutions with the retail and you see how turbocharged they can both be on Hedera, I think, everything's looking much more positive this week than I've felt recently with other sort of macroeconomics. I think everything's looking a bit better at the moment, at least in crypto. And so I'm excited for next week to see what happens.
Yeah, very well said. Next week, we're going to be doing a focus on Hedera and healthcare. We're also going to try to get some more of those questions in, so make sure you drop some of your questions down there in the comments for Sharky Rob. Don't forget to check out Karate Combat. That's going to be a fantastic fight this week. Make sure you participate in that up-only gaming, and we'll see you next week.
We are back with KC40, June 24th, live from Miami, Florida.
Big right hand from Samuel Eriksson.
A welterweight clash between Samuel Eriksson and Alexander Budabank.
Gabriel Varga versus Edgar Scrivers for the #1 contender spot in the lightweight division.
First time in Karate Combat history, we have a belt unification. We have our champion, Joshua Quahigan, versus the interim champion, Rafael Agai.
Don't miss KC40, June 24th, Miami, Florida.